Welcome to the Fintech Frontiers podcast. Today, we're joined by Art Sidikoff, a seasoned banking executive, serial entrepreneur, and digital mortgage innovator. As the president of GenNext and founder and CEO of GenNext.Mortgage, Art is helping reshape how home loans work in the digital age. With over 25 years of global leadership experience at major financial institutions and a passion for smart, scalable fintech solutions, he brings a wealth of insight to the conversation. Art, it's a pleasure to have you here with us today.
Thank you, Stephen. Yeah, I really appreciate your invite and my pleasure to be here.
Great. So maybe we can start off by, could you just tell me a little bit about yourself and your background that led you into...
Sure, Stephen. Yeah, and my background is very international background, I would say. I grew up in Russia, moved to the US, lived in the UK, in Turkey, Belgium, a little bit of Latin America, Mexico, Brazil, moving around the world every couple of years over the last 30 years. Then suddenly, I settled in Massachusetts and I enjoy it. And I have two little kids living with me. So, happy father, happy entrepreneur. Yeah, so mix of executive backgrounds in banking, hardcore banking, corporations. And throughout my life, I was enjoying creating new ventures, starting from very young ages back in post-Soviet Russia and transitioning into, emerging markets like Turkey. And now for the last 3 years, I'm fully focused on my new baby. It's called GenNext.Mortgage. And that's a company which is driven by innovation. And we are still relatively small, but we are growing actively, and hopefully will become one of the major players in the US mortgage market over the next few years.
Fantastic. So your life and your career really has spanned the globe. You've been in different markets and you've been in different types of companies. I'd be interested to hear how, what do you see as maybe the difference from being in a large, banking corporation to a smaller, high potential virtual organization? There must be huge differences there.
Sure. Yeah, that's a very interesting question because it's so close to my heart, right? And it comes also a little bit to the inspiration of creating GenNext.Mortgage. And the company was created really in post-COVID era, where I was still running a large corporate executive job with a large banking organization, State Street Corporation, and a big chunk of the financial operations with people, around the world. Throughout my life, I was thinking, how to make a company enjoyable, really, for people to work in, how to make it more so both, employees and clients would be much happier. Really, it brought me to the exit from the corporate careers, working for multi-thousand people companies and creating something new, something which could be run differently in a fully virtual environment, driven by technology. So back to your question on the differences. Of course, there are tremendous differences how we work in large companies, global, multinational banking companies, and smaller, much more dynamic virtual fintech companies. It comes probably to the nature of this company. So, working for companies like Citigroup or AIG, State Street, we're always trying to drive innovation within the companies. But I believe, and it's my personal opinion, you can drive it only to a certain extent because there are limitations just being a large company with a lot of legacy, with a lot of legacy systems, with a lot of people who went through certain, training and school and kind of hardcore, cutthroat, corporate environment. So it shapes a certain type of the company, which is, strong, multinational. At the same time, it's somewhat limited in how far it can go in innovation. So decision-making chains are long and a lot of legacy. When we work for small fintech companies, the sky is the limit. And the sky is the limit. Of course, the limitation is resources, people resources, funding, time resources. When you work for bigger companies, you get the illusion of unlimited resources. In a small company, you always need to prioritize, always need to do things very efficiently, with quick decisions. I would say what's appealing to me working for a smaller company and establishing a smaller company, it's really creativity, right? Creativity, you foster that spirit of, every idea is appreciated in the company. You can, especially over the last few years, I would say the last 3 years, it's just revolution what's happening in the world and AI area. You can make the company very attractive in a virtual sense for people to work and enjoy this work. So you can break a lot of barriers which existed even until 2019, 2020. So I would say there are pluses and minuses of working,
Yes.
For small company versus big company. Just my nature, I always enjoyed running smaller companies due to innovation spirit, people-oriented culture, this team spirit which we are trying to create at GenNext.Mortgage.
Great. And I know that there's a global competition for the best talent available. Do you see opportunities in crafting an organization where it's enjoyable for work and that you can participate on your own terms? Have you been able to maybe attract talent, from those larger corporations to your smaller company because of this difference in culture, or is that? Or I'm just trying to see where it really moves the dial.
I hear where you are going, Stephen, and again, very interesting question because we are hiring daily in our company, GenNext.Mortgage, and I would say for a smaller company overall, it's more difficult to attract the talent in a traditional way, right? So last couple of generations went through colleges and universities, and it was almost mandatory to spend, 10 years in a big corporation, showing how diligent people can work and shaping up into managers and executives. Certain career ladder, which was attractive, appealing. People went to the best business schools, right? And there was a certain kind of system of shaping up this talent, and that would be probably majority of attractive careers, right, over the last couple of decades or even more, like 50, 60 years. Right?
Yeah.
Now what we see, there is a completely new generation of people. And I never discriminate. Like I see older people who are very tech savvy, very dynamic, very happy to work in virtual environment. And there are, younger people who are not tech savvy, whatever we say about Generation Z or generation, millennials, right? I think there is certain generational trend, but at the same time, it depends on people, on their interests and trainings, right? So attracting talent to a smaller company, it's an interesting question. We are hiring mortgage advisors, sales-oriented, client-oriented. We are hiring mortgage processors who are back-end kind of workers, going through mortgage origination cycle and bringing loans to closure. Obviously, there is a difficulty, I would say, for smaller companies to attract talent, but at the same time, there is a tremendous opportunity to attract a certain type of talent which is more dynamic, focused on the result, who requires less babysitting, more, self-discipline. And surprisingly, there are lots of people of this kind in the market nowadays, and it's becoming probably more and more. So clearly, while big companies are dragging people back to the offices and for their own reasons, we are trying to attract more dynamic, flexible talent, which is people who are enjoying working in a completely virtual setting, people who are flexible, are incentivized to reach certain goals. And that requires reshaping the company itself, reshaping incentives, reshaping, environment, giving people tools. So attracting talent, I think we've been quite successful in attracting right people, but this world not for everybody. Not for everyone.
Yeah, for sure. And in terms of the incentives, traditionally, it's kind of stock options can be where people, where people can have a share in the future of and they're trying to generate a lot of value. So is that an important part of the mix?
I would say, overall concept of linking results to for people to manage those results, right? And incentivizing people with achievements is important. Let's say in big companies, referring to my, more than 2 decades of managing thousands of people in the companies and hundreds of people in the companies. I think in a smaller company, we are usually more successful linking result of the work to incentives and allowing us not to, babysit and micromanage people, but linking it more to the outcome of their job. And surprisingly, certain things which I couldn't achieve in larger companies where, let's say, typical, back-end worker would be less incentivized, to produce certain output, right? It would be more like fixed salaries. It would be more, managed hours. You need to come to the office. You need to make sure you're supervised by a manager. So more operational jobs. But in our company, GenNext.Mortgage, we found the ways to incentivize the operational work as well. You can link it more to the outcome, to the amount of loans closed or to the files processed, and giving the right tools to people. Let's say our company is on Google Workplace using obviously specialized technology, using some additional tools. I think that creates a good incentive for people not to be micromanaged, not to be managed by hours. We would never do like, okay, virtual presence, who is in the virtual office, who is not in the virtual office. Leave it to people, right? Incentivize them properly, give them financial incentive to be productive, and that could work. At least it could work in a servicing economy. And probably it's not going to work in government sector because very hard to incentivize people. Probably it's going to work a little bit worse in large corporate environment, but I think in fintech industry we've been somewhat successful incentivizing people to achieve results.
Yeah, well, likewise in Keeper Solutions, we're a services company, so we're not a fintech startup. Our clients are fintech startups. We, as founder, I was keen that we get people who would take ownership for tasks, who would be responsible, who would be bought in. So a number of years ago, we set up a scheme where we actually share 10% of the annual profits with the company. So people are focused on the company doing well. And also there's this kind of phantom stock option arrangement that if the company makes an exit, everybody's got a part of that. So as a kind of a globally distributed virtual/hybrid company, most of our people work from home. We have a few offices here and there. People go to them as they wish. That type of culture we've tried to foster by incentives, but also if we find that people aren't really able to operate in that environment where they've got to take responsibility for their own time, then they don't tend to succeed in this environment. So it's about creating a kind of really positive environment for creativity.
And the common theme, I think I'm always asked, how to create company's culture, right? If you don't get together in the office, if you don't have, water cooler conversations, if you don't have exchange of, whispers in the office or something, right? And there are ways of doing that, right? There are ways of bringing people together periodically. There are ways of bringing people together for certain coaching even in virtual environments. And we are a very young company, and we are just getting to this stage where we are trying to bring people together like physically. For joint training sessions or team building activities. So much more of that is planned for this year in our company. And we are a company which was established 3 years ago, but it's a licensed business. It's a very regulated business. So we've been working actively with clients probably just for, I would say, just over 1 year.
Great. And tell me, so like, what is your core business and your differentiators?
Sure. I mean, we call ourselves GenNext.Mortgage, right? So there is something in the meaning of these words, right? Generation Next, mortgage. In the US, when I got to this sector, honestly, I was a bit shocked how archaic the mortgage sector is in the US, especially after working for larger companies or moving around the world and attending lots of startup pitching sessions in New York and Boston and London and Sao Paulo. You are somewhat shocked. Like U.S. mortgage market is very, I would say, archaic overall. There are leaders, there are pioneers, there are great technology companies, and I'm not going to name some of them, but I'm a fan of a few who are real innovators. And, we had to establish a company in a certain way. I mean, we would probably skip a couple of steps and jump right into, instant video mortgages, within 3 seconds, right? We can imagine that. Right? But at the same time, there is a reality of the market where we have to follow certain rules and regulations. So for now, I would say we haven't yet actively jumped into that innovation stage. So we've been establishing ourselves as a trusted lender, somewhat focused on the needs of a newer generation of borrowers, because in the US, we do have a problem of mortgage affordability, came much more of a problem over the last couple of years. Rates jumped from 3% to 7% for 30-year mortgages in the market. So less and less people can afford mortgages, and we started thinking about how we can make mortgages more affordable for a younger generation of borrowers with their own trends, sometimes selecting more urban environment versus, rural environment, sometimes trying to get a house earlier. Surprisingly, newer generation is looking to invest in real property earlier than, let's say, my generation. I'm generation
that's
X.
great if they can.
So, there is a lot of interest in market here, and there are million of different ways how to allow a younger person, younger professional, let's say, to invest in real estate earlier. And that's kind of a main theme which this company was established on. Over the next few years, obviously, we envision somewhat more and more, well, I hope a little bit more, I wouldn't say deregulated market, but market which would allow more innovation in mortgage space in the US. Let's say, my dream is to do instant mortgages over the next few years. So for now, we cannot do that. Only last year we get regulation where we are able to close mortgages over video with clients in more and more states. It's a bit of inertia, but at the same time, we are finding the ways how to make housing more affordable, how to allow more borrowers to buy houses, and preferably earlier than prior generational borrowers.
Great. And how are you using innovation to differentiate yourselves then? I know you've been in the sales mode, but or how are you planning to do it?
Yeah. I mean, we are finding the ways, and I would say even obviously there is a bigger kind of data process behind our company, right? And more opportunities to find qualified lenders who sometimes don't even know that they are qualified to buy a house, right? It's a very common discussion in our company when we speak to a person, let's say of millennial generation or generation Z, right? And you educate them that you actually can afford a house. You can buy a property, right? So finding the leads, qualifying people, finding qualified borrowers. I think there is a lot of opportunity here from the data perspective.
Yes.
And you have a question?
So it sounds like with analysis and personalization, you're actually finding your customers by identifying those that would qualify but might not even be aware of that.
Yeah. So there is a lot of data in the market, right? So we are buying data, we are investing in data. There is a lot of data nowadays available.
Go ahead.
Stephen. So there is a lot of opportunity in a new data world, and it's evolving. Right now, we are definitely in the age of AI revolution. So it comes not only to these bigger processes where we are looking for qualified borrowers, we are looking for new ways of advertising or de-anonymizing users or whatever way you twist it, but also in day-to-day work. I think it's a tremendous opportunity for an additional efficiency in the company, particularly smaller company. Previously, we were talking about lack of resources. resources, right? In a smaller company,
Yes.
we want to do million things, but we are limited in resources in smaller fintech companies. So AI, in particular, opens up horizons, I would say. Let's say, just referring to my last 3 weeks of my personal experience, and I would say I'm probably more tech savvy person, having diplomas in applied mathematics and physics in addition to my 2 master's degrees in finance, right? But I don't know, just referring to Gemini or Grok, right? You don't need anymore a team of, let's say, I don't know, if we talk about hiring people, we can have much less HR professionals now, right? What would take a week previously develop an hiring strategy and coming up with 10 job descriptions and vetting them. If you are savvy in working with AI nowadays, even these tasks could become much easier, right? So instead of 5 human resource professionals and compliance professionals, you can use probably AI subscription for Super Grok, right? Or Gemini.
Yes.
And you come up with somewhat better outcome, I would say. Honestly, I find myself more and more enjoying communicating to AI much more than some of the specialists I had throughout my career. And when I refer to the tasks of programming, let's say, or some complex logic of matching borrowers, with some personal information, I enjoy more and more spending hours with AI such as Grok, writing and rewriting, code and coming up with different, logic and outcomes. What I could do now in a couple of hours with AI, implementing, let's say, the code in Google Cloud or Amazon Cloud, right? Previously would take probably a couple of weeks of work with a team of 5 programmers. Some of them would be good, some of them I wouldn't be enjoying working with, but here it's a tremendous opportunity to cut the capacity. And I already see a lot of application, not only in hardcore kind of, intellectually driven logic, but even in day-to-day tasks. Instead of, 5 HR people, you need 1. Instead of, 10 compliance people, you need 2. Instead of a team of programmers, you need probably 3 skilled programmers who would replace a team of 20 programmers. So these are just some of the applications, and still we need licensed professionals. We still need good project managers, good communicators who bring it all together. But at the same time, it's a tremendous opportunity to cut the cost in mortgage companies. So the borrower eventually would benefit from this efficiency, right? So that's why my company is consistently probably at least, 1/8 of a point below the market in the US. So in the states where we operate, we rarely lose clients because we are leaders in mortgage rates. And especially in the age of high mortgage rates, right, where people were somewhat used to 3%, 2.5% mortgage rates in the U.S. Now we are at 7%, and we had spikes to 8%. Saving every half a point it's a big deal for the clients, and our company offers that, and a big part of that is using these efficient tools and the AI within the company. At the end, employees benefit, borrowers benefit, and the company is growing.
The win-win. And tell me, Art, what do the next 12 months look like for GenNext.Mortgage?
Sure, Stephen. Yeah, we moved. It's a startup at the end, right? So fintech startup, GenNext.Mortgage, with a website, GenNext.Mortgage, no comma at the end, right? But to the next 12 months, scaling up. Really, we are trying to scale up. It took us some time to gain traction. It took us some time to figure out right type of people to hire, because our company is not for everyone, as we discussed before. Right? We need people who are very comfortable working in a virtual environment with kind of new age skill sets. I'm not talking about age of employees, I'm talking about skill sets. And we are growing. Even over the last two weeks, we hired probably half a dozen of new salespeople, and we will continue this trend in increasing our front end and using efficiency within the company. We don't need to replicate the same at our kind of back end. And again, referring back to traditional mortgage companies in the US, they see an opportunity to grow their loan portfolio. They just hire back-end people and they do things manually. They want to process 5 more files per month. They hire, additional processor per 5 loans. We don't do any of that. We are trying to leverage the process. When we grow tenfold on the front end, we just increase a few people on the back end.
Yes.
But scaling
So,
up,
so
and
you're
the most interesting topic, so Stephen, it's really jumping in that dream of ours. It's really leading by innovation. I mean, as a growing company, we had to establish ourselves. We had to get to a certain level, get certain expertise, and now I think we envision ourselves jumping into that new stage of leading by innovation, translating it into client experience, and this is how the next 12 months would look for us.
Fantastic. Well, I can see how your innovative approach to creating an environment where people can innovate and work remotely for attracting the talent, and where you're using technology and innovation to enable scalability and greater productivity so that you can offer better rates on the market, and then that you can scale up without scaling up your costs, so the value of your enterprise can grow exponentially from that. So it looks like it's an exciting journey ahead for you and the team. We look forward to watching it.
Thank you so much. Thank you so much, Stephen. And let's continue speaking periodically. And thank you for this kind invite to your podcast. Thank you so much.
It's our pleasure.
I'm happy to share at least some of the experiences.
Thank you very much, Art. Thank you.
Thank you.